Let's talk about the markets in 3 minutes. And the big thing that lies ahead, US CPI. Can that cut through, do you think, this very in-the-moment CPI reading? Will that cut through when really the markets are just obsessed with Trump and how inflationary his policies are going to be?
Yeah, I think it does because it speaks to that. You know, if we do see sort of a hotter than anticipated reading today, you know, we're expected to see about 3.3%, I think, on the kind of core inflation year-on-year figure. If we do see that becoming in hotter than expected, that does kind of like sort of give a higher base, I guess, as we go into a Trump administration, which could, again, add to inflationary pressures. So people are really kind of closely watching this. At the moment, there's a bit of a question mark about how much the Fed can cut. And they're not even necessarily pricing into their forecasts yet some of these inflationary policies coming through from Trump. They're looking at inflation, they're looking at the labour market. So I think if we do see kind of sort of an inflationary figure that is away from expectations, either on the hotter or weaker side of things, that could kind of move the needle and sort of actually make its way into the mainstream.
Let's talk about the dollar and ask my favourite question. Where does the buck stop?
It's a good question. We have keep hitting highs after highs. We were back to another one-year high on BBDXY, the main kind of dollar index yesterday. We're seeing that push down the yen. We're seeing that push down the pound. The yen is going to be a really interesting place to watch because we are now back in that intervention level. We saw the yen kind of moving through 155 earlier this morning in Asia hours. So I think that's going to be really interesting because it kind of really sort of raises the temperature for policymakers around the world. But the question of where it can stop is an interesting one. I think it's going to come down to this sort of push-pull between monetary policy and fiscal policy that we're going to be seeing play out over the next sort of 6-12 months. You know, if we do see kind of Trump come in with more fiscally inflationary policies, that slows down monetary policy and means that the dollar can stay strong. But if we do see, for example, this inflation print suggesting that actually, you know, the Fed can go faster, then maybe we kind of see the dollar sort of ease off a little bit in the short term.
You're already seeing that in terms of the weakness that you're seeing in the yen, at least this morning as well. But I'm going to ask the flip question of Guy, that if you continue to see this dollar strength and parity with the euro, certainly in conversation, how weak can the euro fall?
Yeah, I mean, I've started to see sort of like, 95 cents as kind of like something that people have been saying, so moving through parity. Wow. If we do see kind of tariffs sort of like coming through in force. So we're obviously around 106 at the moment, so that would be a significant move. But that's, if the stars align for a weaker European kind of markets weaken as well. I think the other thing, though, to watch is US stocks. They're starting to get very, very pressured by higher yields, by the dollar. We really did sort of start to see kind of like that rise up in stocks easing off a little bit yesterday, and there's a question mark about how high yields need to go before they really start to put kind of the pressure on real estate stocks in particular.
Who are you hearing 95 from? A lot of people?
It's starting to come through in a few analyst notes as like a out there scenario, but I'll keep you posted.